Hey everyone, welcome back to the Momentum Finance and Stock Investing channel. My name is Mo, and in today's video, I'm revealing the details of my $889,000 ETF portfolio. I'll break it down in terms of what I hold, how much dividend income this portfolio generates, how it's performing in these volatile stock market environment that we're in, which accounts these funds are divided in between, as well as why I choose ETFs to build long-term wealth using a simple set it and forget it strategy. First things first, I mainly invest in exchange traded funds or ETFs because they offer simplicity and there's no need for stock picking and speculation as a result of that. On top of that, it provides me an instant diversification, including broad exposure to thousands of companies in the stock market globally. There's also reliable long-term growth and a modest dividend income, as these dividend income come in on a quarterly basis, which we reinvest and put it back into our portfolio, trying to build a much larger portfolio size over time, as you've seen and observed on this channel so far. 91% of our holdings are in XEQT. That's the iShares Core Equity ETF portfolio, an all-in-one ETF covering global equities in terms of Canada, US, emerging markets, as well as international developed markets. 6% of our holdings is in VTI, Vanguard Total Stock Market ETF for extra US exposure. And lastly, 3% is in VT, Vanguard's Total World Stock ETF, which is just to round things up and give us a little bit of that extra exposure when it comes to investing globally, but in a US dollar ETF, as we hold both VTI and VT in our a registered retirement savings plan, mainly with the purpose of trying to minimize withholding taxes. As for XEQT, we do hold it across all of our accounts, whether our non-registered account, TFSA, RESP for our daughter, as well as RRSP. While the focus of our portfolio is not dividend income and mainly more so focused on the total return of the account, it is nice that we do receive quarterly dividend income, which, as I indicated earlier, we do reinvest it all back into the same positions and holdings that we have. Currently, our portfolio has a yield on cost of approximately 2.5%. And in terms of the dividend income we receive in a year, it's approximately around that 18,000 or so mark, which comes mainly from XEQT, and the remaining balance comes from VTI and VT, approximately $700 from VTI and $600 from VT. If we average that dividend income over months, that equates to approximately $1,500 per month in dividend income, with essentially no effort beyond staying invested in these holdings that we have. Looking specifically at our three holdings and how they've performed so far in the year, XEQT shares are up by 3.3%, VTI is up by 1.4%, and the one that has performed the best out of the three of them is VT, which is up by 5.5% so far this year. I would say it's not that bad given the all turmoil that we've had in the stock market so far, because of a variety of reasons, anywhere from the tariffs to economical and political unrest, you name it. Especially for us, as we are long-term investors, diversified investors, we're not really intending to sell any of our positions whatsoever. We are going to be staying invested for at least the next 8 to 10 years. In terms of the breakdown of our portfolio across different accounts, for the purposes of tax efficiency, we've tried our best to make sure our TFSAs as well as our RSP accounts are all maxed out. Between my wife and I, we have a total amount of $225,000 invested in a TFSA in terms of the balance currently, based on the growth of the accounts, $202,000 in RSP, as well as the remaining balance of $439,000 in non-registered account. Main reason for non-registered account is for our Smith Maneuver portfolio, as well as the remaining one is because we wanted to invest in the stock market, but we had already maxed out all of our registered accounts that we are eligible for. Lastly, there is approximately $22,000 invested in our daughter's RESP. For the purpose of this exercise, it is counted towards the overall portfolio amount that you've seen in the video. Just as a quick reiteration, I use this ETF heavy approach because it's consistent, diversified, and also low cost and low maintenance. It let us essentially, as new money comes into our account and we are available to invest, pretty much go ahead and buy those same ETFs, majority of them right now going towards XEQT, and allows us to have the focus on our lives while we let the money grow and do its thing behind the scenes. There's no need for us to chase any hot trends or do any day trading, just a reliable, boring system of building wealth over a long period of time. If you are building an ETF portfolio or thinking about simplifying your own investing approach, I hope this breakdown actually was beneficial to you and gave you some ideas how a simple portfolio could look like. Of course, please do your own due diligence and do not just blindly buy into these ETFs or any ETFs for that matter that you hear about on YouTube or other platforms. I'm not a financial advisor, and this is mainly sharing my journey, how I've tried to simplify our investment portfolio for my own household. If you enjoyed this video and found it beneficial, I appreciate if you drop a comment and give this video a like. It really helps to grow the channel. And of course, don't forget to subscribe to our channel. Here on Momentum Finance and Stock Investing, we talk about investing in the stock market for building long-term growth. I also do regular interviews with folks who have already reached financial independence, retire early, as well as those who are currently on their path investing in the stock market, with the goal of learning from their experiences and failures and lessons learned, hoping that it actually adds value to you as well as to me as I learn along this journey. By the way, before I forget, if you're interested to see how my portfolio is doing as well as stay up to date with my contents, I do encourage you to check out my profile on Blossom. Plus, it's an opportunity for you to interact and engage with over 300,000 investors in Canada and US, learn from them. There are useful educational contents on Blossom, and best of all, the app is free to download and access. Just feel free to use the referral link that is available in the video description. I hope to see you all on Blossom as well as on YouTube, and thank you so much for watching this video until the end.